So good morning, everybody. It's really a pleasure to start this meeting. This is a seminar on sustainable finance that has been organized by me and Professor Thomas Renstrom as lecturers of economics and savings and ESG investing, and also by the Master in Risk Management of Pisa University. So basically, this is a joint collaboration between these two courses, and most importantly, it's meant to be an open meeting for all possible and potential interested attendants. And it's really a pleasure and an honor to have with us Massimo Scolari, who is a manager of conformance in finance in Milan, and he will share his expertise in financial management and sustainability driven investment strategies. And most importantly, at least as important as previous information, this meeting has been also in collaboration with the Erasmus Plus program, and in particular with the Beyond project that has been financed within the cooperation partnerships in higher education project 2024 by the European Union. Okay, this course is involved with this project is involved with ESG ESG practices and education among young people. Okay, so thank you, Massimo, again for sharing your time and your experience with us. I think it's now time to start, and I would say that we can split the presentation into two parts. In the first part, Massimo, I think he will show some slides about the topic, very hot topic on ESG investing and practices and regulations. And in the second part, I think we can leave space to the floor for questions. There are several students connected here and present, both online and in presence, so that I think they are going to ask you some interesting questions, just exploiting the fact that you are with us. Okay, Massimo.
Okay, thank you very much. Thank you, Luca, and good morning to you all. I would share my screen for the slide. I think that is okay. Can you confirm that you?
Yeah, sure, great. Yeah, we can see everything.
Okay. So thank you to you all. The topic today is the sustainable finance, and I would like to introduce with some data about the climate change. And before starting my presentation, I would point out that my approach does not contain any reference to political or ideological opinions, and is based only on official available data documented by international institutions and regulatory issues. So starting with the climate change, the last year, 2024, was a second record-breaking year following the exceptional 2023. So it was the first year with an average temperature clearly exceeding 1.5 degrees. That's the threshold set by the Paris Agreement to significantly reduce the risk and impact of climate change. A lot of global records were broken for greenhouse gas level air temperature, sea surface temperature, and extreme events. Also in Europe, we had an anomaly of the temperature of 1.47 degrees. It was the record also for Europe. This data come from the Copernicus Climate Change Services, which are the official body for the European Union to study and publish a report on climate change. In details of their report, they said that the last year was the warmest year in the dataset record. We had a global average temperature of 15.1 degrees, higher than the previous year. And, sorry. And it was the first calendar year to exceed the level, the level 1.5 set by the Paris Agreement. So every month from January to June was warmer than previous year. And on 22nd of July, we have a new record height of 70.16 degrees. You can see the trend of the global surface temperature, and you can see from 70s to last year, and you can see that the last 2 years was very, very high in comparison with the past. So as I told, we had the first year with global temperature more than 1.5 degrees. That was a critical level. The Paris Agreement aims to hold in the increase in global average temperature well below 2 degrees above the pre-industrial level, and pursue efforts to limit the temperature increase to 1.5. Obviously, the critical temperature have to exceed the critical level for 1 or 2 or 3 decades to confirm that one or another of these thresholds passed. So last year is the only 1 year, so does not imply that the Paris Agreement has been breached, but the probability of breaching the 1.5 target of the Paris Agreement within the 2030 is now highly likely. So, passing to the second part. Now we can focus on the European Action Plan and the regulation. The first was the climate change we have seen and the related financial risk. And then we go through the European Action Plan and regulation. Risk is crucial because the risk management is crucial because the climate change we have seen can be a driver of conventional risk types. And you can see an overview, an example, how the climate change can be a driver of a conventional risk type. So it's not only a risk for itself, but the climate change can contribute to increase the traditional risk. From this table, you can see the division from physical and transition risk. We can have a definition of this different type of risk. Physical risk are financial risk associated with change in climate. We have two kind of physical risk. The first is acute, is related to one-off event, for example, weather events. And on the other side, we can have chronic risk, which is permanent, like sea level rises through the world. The second risk is the transition risk, involve a change in climate policy by the institutions, changes in consumer behavior, or change in development of a technology that affect the shift from lower carbon economy to green economy. An example, the biggest example is the automotive industry, for example. This table from ECB, the central bank, European Central Bank, show that how the climate risk and the climate-related environmental risk could contribute to the traditional risk that the risk management in the banks and intermediaries normally control: credit risk, market risk, operational or other risk like liquidity or business model. So it is crucial that the intermediaries and banks have to introduce the monitoring of climate change risk into traditional model of risk management. An example of this is the communication by the Bank of Italy, in which a couple of years ago sent a communication to all banks and intermediaries in Italy, in which they developed an initial set of supervisory expectation about the integration of climate and environmental risk into corporate strategy, governance, control, and risk management system. To the European Green Deal was the very important question for this part of the presentation. We start with the Paris Agreement that we have already said before. It was adopted by 196 nations under the UN Climate Change Conference in Paris in December 2015. As I told before, the agreement is intended to hold and increase the global average temperature well below 2 degrees above the pre-industrial level, and to limit the temperature increase to 1.5 above the pre-industrial level. The reason for this threshold is that the expert committee of the United Nations Intergovernmental Panel of Climate Change indicates that crossing the level of 1.5 threshold trigger far more severe climate change impact, include more frequently drought, heat waves, and rainfall. The Green Deal of the European Union was intended to apply the Paris Agreement in the European Union. The aim is to transform the EU economy into a modern, resource efficient, and competitive economy, and the target is that to reach no net emissions of greenhouse gases by 2050. Besides that, to working for with the aim to separate the economic growth from the resource use. 1/3 of the 1.8 trillion investment from the Next Generation EU Recovery Plan will finance the European Green Deal. After the launch of the Green Deal, the European Commission set an action plan for financing sustainable growth. As we have seen, a lot of public research was devoted to the Green Deal, but they are not enough. It's important to sustain the transition, the environmental transition, also with the private investment. So the role of the financial system and financial intermediary to sustain the transition, the environmental transition, is crucial. Sustainable finance can be defined with the process of taking the environmental, social, governance consideration into account when making investment decision in the financial sector, leading to more long-term investment in sustainable economic activities and projects. Environmental consideration include the climate change mitigation adaptation. Social consideration could refer to issues of inequality, labor relation, investment in people, human rights issues. Then the governance of public and private institutions, management structure, employee relation, executive remuneration. A big picture, ESG big picture, I can show on the left side of this graph. You can see the corporates that are divided in brown and green. So they have economic activity, sustainable or non-sustainable. The ESG risk could affect corporates, and then in turn can affect the financial markets and investors. The scope of a sustainable investment in the lower side of the graph is to work for more investment in the green corporates, both on financial products bought by the banks, the banking system. The ESG regulation by the European Union was approved at a different level. The first pillar is the European taxonomy, which is a regulation that are the aim to introduce an official classification of economic activities that contribute to climate environmental objectives. The second important pillar of a regulation is devoted to disclosure. Comprehensive disclosure regime for both non-financial and financial institutions to provide investor with the information necessary to make sustainable investment choice. The third one is a collection of tools, like, for example, the delivery of European official benchmark for sustainable investment, green bond standard, and the ESG rating regulation. Starting with taxonomy. Taxonomy is a regulation published in June 2020, And the Article 9 of the regulation fixed what is the comprehensive objective that the regulation wanted to reach. The first is climate change mitigation. The second is climate change adaptation. The third one is sustainable use of protection of water. The first is transition to a circular economy. The fifth, pollution prevention, and the last one is biodiversity. The Article 8 of the taxonomy regulation requires that large and listed financial and non-financial undertakings to disclose how to and to what extent their activity qualify as environmental sustainable. So under this regulation, the non-financial undertaking started disclosure and taxonomy alignment data into 2023. In addition, manufacturer of financial products disclosure under the regulation of disclosure regulation SFDR, starting reporting taxonomy related information in 2023. Taxonomy fixed what are the conditions to be met to qualify as environmental sustainable. The first one is make a substantial contribution to at least one environmental objective, one of the six that we saw before. Second one, in the meantime, doing no significant harm to any of the other 5 environmental objectives, comply with minimum safeguard, particularly the United Nations Convention about Human Rights, and finally comply with the technical screening criteria that are fixed by the different sector, and the corporates have to develop the activity within the limit that the technical screening criteria of the taxonomy indicate. So what is the taxonomy? It's a classification system to establish a clear definition what is environmental sustainable, but it's not a mandatory list to invest in this area. It's not a rating for greenness of company. And the point is to facilitate the transition of pollution sector to green activity. After the application of this regulation, we have some data. A total of 2,180 companies in Europe had the obligation to report on the taxonomy alignment, and they account for nearly 13 trillion in assets. Overall, the capital expenditure of this company defined as taxonomy aligned is about 250 billion in 2023, with a 34% increase relative to the previous year. Manufacturing sector is most important, but also beyond the taxonomy aligned investment, we have additional transitional related capital flows that are emerging. 2,000 billion in investment, while are not fully aligned with the taxonomy, but potentially contribute to European transition. This show the data from 2022 to 2023, you can see the progress of this. Investment fund also use the taxonomy to analyze the content of sustainability in their investment, as we will see in the area. Okay, disclosure regulation for financial participant, SFDR, is another important regulation starting from 2021 to inform investors about how they consider the sustainability risk that can affect the value and return of their investment, and the adverse impact that such investment could have on the environmental and society. They have to disclose asset manager, banks, and intermediaries in their website, product contractual document, and annual report. This regulation does not force market participants to consider green criteria when invested, but set rules that are required to justify the sustainability claims that they make in relation to their financial products. Some data in this area, European fund, Article 8 and Article 9 funds are the classification of the investment fund that promote or have the objective of sustainability in their investment policy. So they reach 6.1 trillion of euro at the end of 2024, and they accounted for 60% of total market share of European fund industry. We had a total of 11,000 funds which are classified by Article 8, and they are the 46% of the market. The Article 9 funds, which are the funds with a specific object in sustainability, represent a market share of 4.3%. That's the trend. Can show the breakdown of SFDR classification. Another initiative by the European Commission is in the April 2021 package. They approve another delegated act about the taxonomy for the classification that activity that best contribute to mitigate and adapting to the effect of climate change. Besides this, the new corporate sustainability reporting directive which oblige a company to provide a consistent and comparable sustainability information. And finally, some amending delegated acts for financial firms such as advisor or asset manager or insurer that include the sustainability in their procedure and their investment advice to clients. The most important is the Corporate Sustainability Reporting Directive, approved on January 2023. A broader set of large companies, as well as listed small and medium companies, will now require to report on sustainability. The new rule is intended to the fact that investor and other stakeholders have access to the information they need to assess the impact of company on people and environmental. For investors to assess financial risk and the opportunity arising from climate change and other sustainability issues. The first company will apply the new rule for the first time in 2024 financial year for report published in 2025. The approach of the non-financial reporting directive is to mix the information that are materially financial materiality, in which how much the external environmental factor like climate can affect the company. On the other side, the environmental and social materially, how much the company affected the external environment. Another piece of regulation is the Corporate Sustainability Due Diligence Directive. We set obligation for large company regarding actual and potential adverse impact over human rights and environment with respect to their own operation, but also on their subsidiaries and those that carry out by the business partner. The requirement will be for a very large company, more than 1,000 employees, to adopt a Paris-aligned climate transition plan. More recently, the European Commission adopted a new package of proposals to simplify European rules in respect to the progress of competitiveness and climate goals. Together, they decided to work for a simplification by achieving at least a 25% reduction in administrative burdens and 35% for small and medium enterprise. Another important regulation affected the MiFID II rules. The MiFID II is the regulation regulates all the financial markets and the financial services. The change of this regulation has been the update to integrate the sustainability factors, risk and preference into organizational requirement and operating condition for investment firm. The application from August 2022. The Green MiFID introducing modification in the MiFID II with incorporated sustainability consideration within financial advising and investment decision making. All the investment firms are required to collect the individual client sustainability preference and taking into account in the advising process and in financial product they offer to the customer. ESMA, which is the authority for financial market in Europe, provided a detailed guideline for the collection of suitability preference by the customer, information to client for sustainability preference, collection of information from client, assessment of sustainability preference, and organizational requirement. Other piece of regulation was the approval of a green bond standard. Parliament and the Council adopted the European Green Bond Standard Regulation. We introduce a system of shared criteria at the European level to the issuance of green bond. One important element of this regulation is that the proceeds raised through the issuance of green bond will have to be aligned with the European taxonomy. So it's important to understand the connection between these different pieces of regulations. Okay. More recently, the Council and the Parliament adopted a new regulation on environmental, social, governance rating activities. ESG rating provide an opinion on company and financial instruments' sustainability profile by assessing the exposure to sustainability risk and its impact on society and environment. So the ESG rating has an increasingly important impact in the evaluation about the sustainability of the corporates and the financial products. The new rule provided that the ESG rating agency will be authorized and supervised by European Security Market Authority, ESMA, and compliant with the transparency requirement. Finally, greenwashing. There is another directive, the SCGT directive on February 2024, for empowering consumers for a green transition and improving protection against unfair practice and information. The directive introduced a specific consumer protection rule to address unfair commercial practices associated with the obsolescence of goods, misleading environmental claims, which are said greenwashing, misleading information on the social characteristic of products. It's the implementation timeline. So yes, we have seen a lot of regulation, and this is the table of the different date of application. So if we have some more time, I can give some data about capital flows toward sustainability.
Yes, Massimo, you have kind of 10 minutes to go, I think, more or less.
Oh, okay. Just to give some data about this important topic. They are provided by the European Platform of Sustainable Finance, which is the body that work is an expert group. We work with the European Commission, and they present a report with a new framework for monitoring capital flows into sustainable investment, using, as I said before, the taxonomy reporting by the corporates. First of all, what are doing in Europe with the greenhouse gas emission? The good news is that the decarbonization is steadily going on. 8% emission reduction in 2023, and for Europe, the gas emissions are now a third lower than the pre-industrial level. So we have already improved 34% from 1990. But a lot of work has to do, as you can see the graph. We have a requirement of nearly 12% annually of reduction to reach the carbon neutrality in 2050. Sectoral contribution, your important data are now how much investment we need. Now the low carbon energy investment is about 400 billion. That's 30% below the need to reach the target of 2030. You can see in this graph the effort of investment dedicated to transition is very high. Will reach in the next decade about 1.6 trillion. It's about 7-8% of GDP, European GDP. That's several times higher than the actual level. So we face a reallocation of large capital sum to meet the European target, about 7-8% of GDP. The investment gap is larger for industry, energy supply, and renovation of building block. By the end of October 2024, a total of 2,000 companies have the obligation to report of taxonomy, and overall the capital expenditure is about 2,250 billion. That was indicated as taxonomy aligned. They increased 34% from 2022, but it's not enough. That's the data. Yes, already. The taxonomy aligned investment and concentration in a handful of sectors. In 2023, 44% of taxonomy aligned investment were made by the utility sector. Okay, that's the utility. You can see the taxonomy data show that the investment toward the transition are increasing. This by and you can see that the bulk of investment are in the production of electricity. We have already also additional capex supporting the transition. They are not taxonomy aligned, but can be defined as capex for tier 1 company. They are not taxonomy aligned, but may support progress toward emission reduction, provided that companies have transition plan with enough elements of credibility.
Massimo, sorry. Can you get back to the previous slide? I was interested in understanding what are the sectors mostly involved in taxonomy alignment activities. So we see electricity, and what else? But this is the most relevant. So manufacturing, some to
yes, you
amount
can see
to
that
36. Yeah.
On the right side, the manufacturer of motor vehicles is 14%. Wholesale and retail trade is very small, 1%. Financial and insurance activity, 2%. Other manufacturing, 13%. Transport and storage, 5%. And production of electricity is 30%. So as they are not balanced. The different sectors are very different in the progress of alignment with taxonomy.
Okay, thank you.
So my time has elapsed, probably. I have also a last part that I leave for your reading.
Yeah, Massimo, can I put the slides on our website?
Yes, of course.
Okay, so great. So that you can recover the slides on the learning website. Okay. Thank you, Massimo. Thank you very much. We really appreciate your seminar here. So as I told you, Massimo is a manager involved in a consultant, also involved in the financial sector in Milan. And in his recent activity, he's glad to share his expertise with young students and generations. Okay. So also Massimo and the Conformings in Finance have hired some students of PISA and our master course. So we have a very nice collaboration with his company too. So is there any questions from the floor concerning these topics? Yes, please. Taxonomy. Can you hear Massimo or? Yes, please. Now you ask the student to come closer, otherwise you. Okay.
Can you hear me now?
Yes.
Yeah.
Yeah, for example, like when we talk about like in general about EU, like transition, like there is a big gap, you know, between developing countries and the developed ones. For example, when you consider Sweden, Finland, Norway, they are like way like progressive. For example, the new purchase 80% of the cars in Norway, EV cars are like EV, like because of the tax incentives. Don't you think like tax incentives are like really important when it comes to ESG implementation? For example, Bulgaria, they don't have much resources in transition, so they prefer to stay on like normal fuels, so they don't care much. For example, Greece have super low rates. And also, don't you think about like, for example, circular economy is like a really important pillar nowadays for ESG. For example, if you take Italy has like 22% tax or like VAT on repairs, like on repair goods, which is exact similar as virgin material. So why someone would prefer to take like a repaired item or something on terms of like which I can buy for new? So don't you think we have to revise some taxes, incentives? For example, also about green bonds, like there are many green bonds. For example, in France or in Germany, they have like tax reduction on green bonds, so people will buy more, or even corporate taxes are lower. But when it comes to UK, they have like no incentive on tax. I mean, on green bonds, so people are not encouraged to do. I mean, definitely a normal person would care about more returns. So I would definitely go for higher return rather than going for sustainable returns, like which pay me lower. So don't you think we have to revise some taxonomy based on tax incentives?
Thank you for your request, but I think that the fiscal policy are very important. And the problem is that we have not a unique fiscal policy in Europe, and the different states, member states, deliver a different approach in fiscal policy. So as you told, we need a more integrated approach to incentive the transition, for example, electric vehicles or good reparation and so on. The problem is that the European Union is a federation of different states. It's not a unique state, and the fiscal policies are different in different member states. So I think that it's very important to approve incentive to make easier the transition, and that's the reason why we need not only the capital from the public states, that they are important, but we need also private capital channeled into sustainable financial products, sustainable loan by the banks, to create an incentive for the corporates to increase their taxonomy aligned activity.
Yeah, definitely. I agree with you. Like we need to create like a more integrate like in all
Yes.
like together. So it would be definitely easier.
Yeah.
Thank you so much.
Thank you
Okay.
to you.
Other questions, please come closer. We have an international class. We have Erasmus students also participating. So where you come from?
Germany.
Germany. Okay, so we have a German guy here.
Okay. So thanks first for the insights. My question would be more about the greenwashing. You mentioned also in the slides.
Greenwashing, yeah.
Yeah,
Yes.
and how does the greenwashing effect or the threat of greenwashing develop through the regulation we've also seen? You mentioned, for example, the EU taxonomy and also newer regulations which were introduced. So how does the greenwashing developed over the time?
We
Was
have
Massimo, sorry, because
in
greenwashing is
yes.
the other side of the coin,
blame.
no? So higher
Yes,
regulation,
yes.
higher problems with the greenwashing, right?
Yes, you wash in green what is brown in in the content. So we have two different kind of greenwashing. The first one is intentional greenwashing, is a criminal, and then we have to address this practice of lie to clients and consumers. The second one is more difficult to address. This unintentional greenwashing, because the regulation I have presented today are very, very huge, and also on an unintentional side, you can violate some rules even if you are not intended to do so. So it's important to understand very well what are the obligations for corporates, financial markets, financial intermediaries, to be sure to communicate correctly to customers and investors. And it's not easy because the number of rules and the number of data to communicate is very, very high. That's the reason why the new omnibus directive of the Commission will reduce the number of data communication, because that's very, very high.
Okay, thank you.
Thank you. Any other question? Who raised hand? Yes, please. Another German guy.
Okay.
Hello. You showed us
Hello.
the data.
What city of German?
I'm from Kassel. It's not that big. It's in the middle of Germany. You showed us data that nearly 50% of the funds are now Article 8 funds, and only
Yes.
5% are Article 9 funds. So
Yes.
the number of Article 8 funds is increasing. Do you think it's really important that these Article 8 funds are promoted because there are so much of it? And is it really helpful with such kind of low limits to have an Article 8 fund that it will have an impact in the end?
The SFDR regulation, Article 8 and Article 9, was adopted in 2021, is the first regulation. And you finished your question?
Yeah.
Is okay? Do
Yeah.
you want to continue?
No.
No,
No. No, he's asking the different. No, the fact that the Article
the point
8
is that Article 8 is not a very clear definition. So a lot of investment funds decided to classify as articulated, but they are very different portfolio of investment. Because the regulation did not introduce any threshold for sustainable investment for this fund. But now the time are changing, and the new modification of this regulation will introduce some quantitative threshold. So possibly in the future we will have more clear definition of the sustainable investment fund.
But do you think that at the moment the Article 8 funds will have an impact?
For the moment, I would tell you to go inside any single fund because they are very different. The Article 8 have a different portfolio and different content of asset allocation and sustainable investment composition. So we articulate just a first definition, but the important is the what is the real portfolio of the funds. You cannot trust only on the definition of Article 8. You have to go deeply in the portfolio composition.
Okay, thank you.
Okay. Any other question? Okay, Massimo, maybe one question about future. Maybe okay. No, there is a question online. So Marco Tangari.
Yes. First of all, thank you for your presentation. My question, I'm not sure it's very.
Can you switch on your camera, please? Can you switch on?
Oh, I'm sorry. I'm from a desktop computer. I don't have my camera, unfortunately. If it's not a problem.
No problem.
Yes.
No disclosure.
I'm not sure if it's a very appropriate question, but we've talked about environment as a financial risk. I was wondering how much of it is actually the environment that it's a risk, and how much of it is actually a reputational risk. So are financial firms ashamed, put to shame if they don't follow the regulations, or do they actually care about the environment and they invest in green stocks and bonds for to have actually a positive impact on the world?
Just a joke, Marco. Are you Italian? Maybe.
Yes, of course.
Yes, of course. You saw, for example, the story of Chiara Ferragni.
Yes.
And they claim on the social purpose of some sweet and Christmas tree sweets, and the company collapsed totally for a reputation. So greenwashing is a great risk for also for financial institutions and banks, and also because there are a lot of environmental association, green association, that overview the activity of financial entities, and they are ready to publish on the media if they find something not clear or greenwashing. And it happened. It's already happened for some European institution, and they collapsed in the European equity market because of scandal about greenwashing for financial products that they deliver. So, how much is the direct risk, environmental risk, climate change, and how much is reputational is different from one company to another. my experience at the company address this risk in very different manner, and they are only in the recent years they understand the importance of this topic on average. The behavior is very different in different banks or financial company.
Okay, so if I could have another question, then should regulators make the laws with this point of view, so that the financial institutions should be regulated as to behave well, to not have this reputational risk, or should they keep on going with regulations that try to make the financial institutions act well from an environment point of view? I don't know if that makes sense.
The regulation already introduced the obligation to include the climate change, environmental risk in the process of risk management. So we have already this obligation. The point is that every banks and every financial institution react in different manner. So we have not a general data about the reaction of financial system. The point is that on the other side of the ocean in the US, as you well know, the trend is opposite, because there is a great opposition to sustainable investment, and the difficulty is that the US is important for financial markets, and this trend could be dangerous also for us.
All right, thank you very much.
Okay.
Thank you.
Any other question? Maybe one question, Massimo, about these opportunities for job opportunities in the risk management field. What do you think, Massimo?
Yes.
You think that the ESG integration factor is just a fashion, or do you think that it is worth it for young people investing in these topics, also for professional developments? In your experience, what do you think?
Yes, my opinion that is permanent. The integration of sustainability risk into risk management process of a financial institution is definitive, and it's a good idea for you to increase your knowledge and expertise in this area, because we have a lack of manager for ESG practice in Italy, but not only in Italy. And so it's a good idea to integrate the financial risk study with also the ESG risk monitoring.
Thank you, Massimo. So again, let's clap our hands and we thank you very much for sharing your time, Massimo, and your expertise, long-lasting expertise in the financial sector and in the financial industry. And so thank you very much, Massimo, for joining us. And hopefully we will meet in person in some months here in Pisa.
Okay, I thank you very, very much to you, and I hope that we'll meet together again in the next future.
Okay, thank you, Massimo. So I stop here.